Welcome to another episode of the program. I am Okpayemi Owoshenyi. We start off with business news. The Central Bank of Nigeria has retracted its earlier directive imposing a 0.5% cybersecurity levy on electronic transactions following significant public backlash and subsequent suspension of the levy by the federal government. The initial policy, detailed in a CBN circular dated May 6, 2024, mandated all deposit money banks, mobile money operators, and payment service providers to deduct the levy and remit it to the National Cybersecurity Fund. Public response to the levy was overwhelmingly negative, with widespread outcry from various sectors, including labor unions and pressure groups. Reacting to the cybersecurity levy during the just concluded MPC meeting, the CBN governor said the controversial 0.5% charge was only being executed by the CBN on behalf of the federal government. Take a listen to what he said.
For clarity, the cybersecurity levy originated from the Cybercrime Act, of 2024. That is where it came out from. There was 2015, then 2024. The Act introduced the levy, which was, and again, important to say, given that it is an act, it was considered extensively by both houses, both the House of Rep and the Senate. And of course, there was a public hearing as a result. And then after that, there was, the issue of the levy, which was stated clearly as 0.5%, was embedded within the final law. Now, as central bank and as bankers to government, we were merely implementing a law that had been enacted. That's all we were doing. We're implementing a law that had been enacted. And subsequently, as bankers to government, as the federal government amended its position, we have withdrawn the circular that we've issued to the various banks. Thank you.
The 210,000 barrel per day Port Harcourt refinery may finally commence operations by the end of July after several postponements. The new date was disclosed by the National Public Relations Officer of the Independent Marketers Association of Nigeria, Okadike Chinedu. According to AIM, the development to stimulate economic activities, reduce the price of petroleum products, and ensure adequate supply in the country. Last year in December, the Minister of State for Petroleum Resources, Eneke Lokobiri, announced the mechanical completion and fresh start-off of the biggest crude refinery in Port Harcourt. We'll go on a short break and be back with the latest happenings in the corporate world. Welcome back. From 1.28 million barrels per day in April, the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, Mele Kyari, says Nigeria's oil production was inching towards 1.7 million barrels per day. This as the NNPCL boss hinted that critical gas infrastructure projects are ongoing to ensure the transport of 8 billion stock of gas daily through an extensive pipeline network within the next 4 years. According to Kyari, the nation's crude oil production keeps dropping due to oil theft and vandalism. The NNPCL boss emphasized the need to fight insecurity in the oil and gas sector to increase production in the country. We'll take a short break, but when Money Matter returns, we'll be discussing CBN increasing monetary policy rate for the third consecutive time. Details of this after this short break. Welcome back. For the third consecutive time, the Monetary Policy Committee of the Central Bank of Nigeria has raised the monetary policy rate, which benchmarks interest rate from 24.75 to 26.25%. Governor of the CBN, Olayemi Cardoso, disclosed the adjustment at the end of the two-day meeting of the Monetary Policy Committee, saying that the decision was taken to further curb rising inflation. The Apex Bank also raised the asymmetric corridor around the MPR to plus 100/minus 300 basis points.
The MPC, however, noted that the inflationary pressure continues to be driven largely by food inflation. The committee thus reiterated several challenges confronting the effective moderation of food inflation, to include rising costs of transportation of farm produce, infrastructure-related constraints along the line of distribution network, security challenges in some food-producing areas, and exchange rate pass-through to domestic prices for imported food items. The MPC urged that more be done to address the security of farming communities to guarantee improved food production in these areas. Members further observed the recent volatility in the foreign exchange market, attributing this to seasonal demand, a reflection of the interplay between demand and supply in a freely functioning market system. The committee also noted the marginal increase in the external reserve balance between March and April 2024 and urged the bank to sustain its focus on accretion to reserves.
The CBN has now raised interest rates 11 consecutive times since May 2022 in a bid to rein in inflation. However, between May 2022 and April 2024, inflation soared from 17.71% to 33.69%. The recent rise on May 15th came amid the surge in food prices. Now, joining me to discuss this new increase is Economist Mukhtar Mohammed. Thank you for joining me on the program, Mr. Mohammed. So how effective do you think raising the interest rate is likely to be in controlling inflation, given the current economic conditions in Nigeria?
Well, it has not controlled inflation in the past 18 months, and it has not controlled inflation in the past 3 months. So I don't see how it will really control inflation in the short term, but in the long run, I think it would definitely have an effect on inflation. But for now, I think it would rather cause other short-term pains, which is in the area of cost of doing business, in the area of high cost of goods and services, and also in the area of return on investment, especially risky investments, will be low. So I don't see how that will definitely bring down the cost of living as it is now in the short term. But in the long term, if all parameters are gotten right, we could see a slowdown in the inflationary pressure.
Okay, Mr. Mohammed, you just mentioned that this new increase could cause pains in terms of businesses. Now, could this decision potentially slow down economic growth or investment due to higher borrowing costs?
Yes, in terms of business, cost of doing business is going to be very high. Cost of borrowing is going to be very high. In terms of consumer patronage, will be low, because the earning power of consumers will definitely come down. These are what will definitely affect business. But for investment, it depends on which device of investment you are. If you're in the equity market, which is the stock market, you will see your investment go down, especially if you are investing in financial equities or in businesses that most of their day-to-day capital expenditure running is being financed by financial institutions because of the cost of borrowing that has gone up. But if you are somebody that is in the fixed income space, in treasury bill, bonds, savings account, yeah, your investment will begin to see a higher return commensurate with what you used to have before now. So when you look at that one, there is the good and the bad side for everybody, depending on which side of the device that you are.
Okay, the cash reserve ratio was retained at 45%, as well as the liquidity ratio at 30%. Now, how do these ratios complement the increased interest rate in addressing inflation?
Well, the whole idea of 45% liquidity ratio and 30% is trying to stop the amount of liquidity that you have in the system. That's the whole idea. So that we had the CBN complaining about some trillions of naira that are in circulation, and some of them are not in the banking space. So they are trying to reduce this to make sure that you don't have so much liquidity in the system. But again, it has this very, very negative effect because you are looking at a country which consumer spending is seems to be the life wire of the economy. And also you are looking at a country whereby 80% of the informal sector, which happen to drive the economic activities of this country, is driven largely by cash. So once you begin to do that, you are going to reduce the level of liquidity in the system, and also that will have a way of slowing down um, consumer purchasing power, and also businesses will definitely have their challenges. But like I said, all these are short-term measures in trying to deal with the monster inflation.
So this is the third consecutive time the MPR will be increased so far. Now, according to the CBN governor, the past increase has helped in taming inflation. Now, do you think this new increase will be effective in taming inflation as the CBN governor has claimed?
I don't think so, unless some variables are gotten right. When he talks about slimming inflation, I'm sure he's looking at it that inflation has come down by marginal, very, very marginal. But again, that marginal coming down of inflation was largely driven by the FX rate that was a little bit stable. Sometime we saw that rate move from 1,800 and went as low as 1,300, 1,200. At the point, it was almost doing 1,100 before it started moving up to 1,500, where we are now. So that what really drive that inflation, little marginal gain we see. So what it means is that most of the inflationary pressure that we are getting has to do with the exchange rate. And unfortunately, this exchange rate is because a lot of the goods that we consume, households, are being imported into this country. So I think the only way we can see this inflationary pressure comes down is if the CBN is able to stabilize the exchange rate. Ordinarily, with a hike in interest rate, you attract more investors, and that will spur liquidity in the exchange rate market. But unfortunately, because of the volatility of the exchange rate, you are not able to see those results that you think will come by attracting investors because of the high yield that you get in the fixed income space.
Because inflation returned to about 33.69% in April 2024. And one of the factors that drove inflation was food. According to the CBN governor during the MPC meeting, he mentioned that food inflation, transportation cost, infrastructure challenges, insecurity, amongst others, as well as exchange rate are one of the factors driving inflation. Now, how do you think these specific issues that I've mentioned can be addressed more effectively in connection with a monetary policy, especially when it comes to food inflation?
Yeah, unfortunately, you see, what the CBN is telling you is that six of the items that are granting inflation are not within our control. The only one we have control over is FX, making strides stability in the FX market. You talk about transportation, you talk about infrastructure, you talk about food security. Those ones are largely driven by the physical side. So how can you support growth in these areas? Then definitely the physical side need to do a lot in the area of food security by making sure that we have stability in terms of people that go to the market to get go to the farm, also to get house product to the market. The insecurity challenge, and especially the farmers and the handlers crisis. Also, you look at transportation, the cost of transportation have gone up because of the cost of PMS, where government is saying they will soon have CMG buses, but those buses are not yet been. Maybe if those buses come, it could help reduce transportation. That also will bring down inflation. But what I'm seeing from those buses are most likely to be flying in the urban area. They are not looking at the rural area. And for almost a year now, we always have this inflationary pressure in the rural area. So for the rural area, because it means moving their goods from one locality to urban area, they will need a source of transport that will be cheaper. So that will bring down the cost of their goods. So all these variables I'm talking about security. Is it in the security of our pipeline so that we can have more oil production? Then the NOS effects, it has to do with the physical side. Is it security in terms of life and property so that farmers will be able to go to their farms? It still has to do with the physical side. So a lot of result that we might likely see will definitely come if the physical side are able to do what they have to do. For the CBN, they will tell you they are doing all their best. They are trying to attract investors. Foreign investors are coming. The climate is cool. They have integrity. People are looking at their openness. That is good. But what really will keep investors in your market is when there is a synergy between the physical and the monetary side.
Governor Cardoso has expressed optimism about moderating inflation. Do you also share this optimism? And then what factors, I would like to know what factors contribute to your outlook?
Well, I don't share so much of the optimism. I will say I will have to wait and see. The only the only factor that I think will contribute for me being optimistic about it will be the exchange rate. As it stands now, we are not attracting exchange rate from the diaspora as much as we want to. We are not attracting foreign direct investors, even the portfolio investors. We read today that about 273% personal investors have flowed out of this country. And that's why we saw that dive in terms of their foreign reserve. You don't want to be doing that. Rather, you are trying to attract more investors into the Nigerian economy. So I think there's a lot of work to be done in the area of attracting investors. And when we do that, then we bring down the exchange rate. That is when my optimism will be very high. Because for now, I still believe that what is driving inflation is not so much of the money in circulation, it's not so much of the cost of borrowing or the lower cost of borrowing. So you try to hide it so that people will not borrow so much, or the equity market that is causing it. But I think largely what is fueling inflation has to do with the exchange rate. And after that is addressed, you continue to have these challenges in terms of stabilizing the microeconomic environment.
Okay, so let's talk about the foreign exchange market now. The MPC said the volatility in the foreign exchange market is caused by seasonal demand for forex. Do you think this is the case, or do you think there are other factors that contribute to this?
Well, seasonal demands could be there because you're talking about summer period. Some Nigerians are traveling and they are using the retail angle, and in that retail space, supply has not been top notch. It has not used to be. Yes, they could contribute, but I don't think it's generally what has really contributed to that space. Yes, it had its own. That space is largely driven because of lack of liquidity. Because until this week, that the CBN is saying that they are, the NNPC is saying that they have done about 1.7 million barrels. Ordinarily, we don't do up to that. We do about 1.3, sometimes 1.2. At the time, we're even doing 800,000. So what will really improve that area is to see how much of crude oil we can sell to attract effects into our economy. And again, the good news is that Dangote Refinery and the NNPC will be coming online almost at the same time. That will reduce the pressure on the exchange rate, because that means we don't have to be buying refined petroleum products, and those money will find their way into the treasury of the Nigerian government, and that could also help boost liquidity and bring down the exchange rate and stabilize it. So if all these fall in place, then we could begin to see we are finally coming out of the wood.
Okay, so the CBN governor said that the controversial 0.5% cybersecurity charge on all electronic transactions was only being executed by the CBN on behalf of the federal government. Well, according to Cardoso, the cybersecurity levy originated from the Cybercrime Act of 2024. What are your thoughts on this?
Well, I'm happy that we have gone past this, but the CBN need to explain. It was a very draconian law. It was anti-financial sector, especially in the area of financial inclusion. I don't think the CBN should absorb themselves of blame because they were supposed to know better in case the executive didn't know, would have advised them accordingly not to do what they were doing, because that single policy, if that's come in Spain, would have killed every innovation that we have enjoyed in the area of the financial sector. So I'm happy it didn't come to play. Yes, if they were doing it on behalf of the Office of the National Security Advisor, but we thought that with the level of knowledge they have, more than the Office of the National Security Advisor, they should have been able to advise the government on, say, look, at this time we are battling a lot of issues. I don't think this is the right time for this policy. Can we hold it on? Then we look at the environment, the business climate, the economic climate, the financial climate, before we begin to come up with projects like this. So they shouldn't absorb themselves, because it doesn't mean because they were given that they didn't have a foresight to be able to advise whoever was giving them from National Security Advisor, or talk to the National Security Officer that this is not the best time to do this. We think it will obstruct the financial sector. I think they didn't do that. So that is where I think they have the blame.
So, Mr. Mohammed, the next MPC meeting has been scheduled for July. Now, before then, what indicators should we watch in the coming months to assess whether the interest rate hike is having the desired effect?
Two major indicators we need to watch out for to see whether those issues have been resolved. One of them will have to do with one major one would have to do with FX. We want to see if there's a reduction in the exchange rate, there's enough liquidity in the system. That is one area we should also look at. And then look at what is it in terms of goods and services cost of doing business. Has it really gone down? If we have those two areas, then we can begin to make permutation on what we think the inflation rates will be. But these two areas are key.
All right, Economist Mukhtar Mohammed, many thanks for lending your thoughts on the program.
Thank you for having me.
You're welcome. That's it on this episode of the program. Many thanks for joining us. I am Okpayemi Owosheni. See you next time.